Thank you. Gentleman from Ohio, Mr. Stivers.
Thank you, Mr. Chairman. I just want to follow up on a question from the gentleman from Texas and something that Professor Scott's been talking about all day. Does anybody on the panel have any reason why all these independent agencies should not perform a basic cost-benefit analysis? Thank you. The second question I have is for Dr. Taylor. Dr. Taylor, you talked about how private investment, and you had the graph about how private investment drives our economy. And with businesses sitting on more retained earnings than any time in the last 50 years, is there a prescription to help them take that cash they're sitting on that's obviously, has a potential to create jobs and help them do that?
Yeah, I think.
And please try to be brief.
This uncertainty out there, which is continuing partly just because the economy is still, recovery is somewhat still fragile. But in addition, I think all these regulatory issues, these uncertainty about what's going to happen with the debt, uncertainty about what's going to happen with taxes, uncertainty about regulations, uncertainty about monetary policy, I think those are all factors that can be addressed and would lead to a more healthy attitude about investing.
Thank you. And something Dr. Cohn said earlier I want to kind of address to the whole panel. Doesn't innovation help encourage demand? In fact, it's the psychology of demand. I would use the iPad as an example. I don't know if any of you own an iPad, but that's something that was just an idea a year and a half ago, and now everybody owns one. I guess I'll put it to Dr. Poole or Dr. Cohn, since you said it before, does innovation help create demand?
Of course it does. New products, new innovations, new ways of doing things help increase productivity, and over time productivity increases demand and living standards.
Thank you. To Professor Scott, you talked a little bit, and your third or fourth point was about regulatory reform, and I can count 7 agencies, if you're a big financial institution, the SOC, the SEC, the FDIC, the Federal Reserve, the new Bureau of Financial Protection, the OCC. I don't know if I missed anybody. I think that's 7. And with the 200 new regulations that are coming in Dodd-Frank, if any of them are in conflict, how did these companies deal with this?
Not well. FSOC has limited, and the answer is not well. FSOC has a limited authority in some instances to try to reconcile differences between the age-old fight between the SEC and the CFTC was granted some kind of muscle. But apart from that, I mean, we've seen the FDIC, for instance, disagree with the SEC on securitization issues, retention questions. This is going to go on.
Doesn't that actually reduce the ability to get capital to businesses and create jobs?
Absolutely. Dysfunctional regulators are not helping our economy.
Thank you. And one other question that I had was, I talked to a banker, a small community banker from First Community Bank, Roger Blair, in my area. He told me a story about a regulator. He has a gentleman who borrowed money for a commercial building 5 years ago. He's never been a day late on a payment. The cash flows are exactly the same. The building is leased the way it was at the beginning. The appraised value has gone down, obviously, by about 50%, and the regulators came in and made him write that loan down by 50%. So every month when the man makes his payment, Roger has to basically find profit against a bad debt. Doesn't that reduce the amount that First Community Bank, that Roger Blair is the CEO of, has available to lend? Dr. Poole.
Well, the answer is yes, but we do need to be careful about picking out particular cases, because you need to look at regulation.
Let me ask you a follow-up question. I totally understand. Do bankers make loans on cash flow, or do the bankers make loans on loan-to-value? Because my grandfather was a banker. He made it on loan-to-value. My father was a banker. He made it on cash flow. And I'm pretty sure that bankers today make it on cash flow. How do bankers make loans today?
The problem with doing it only on cash flow is that if you have good reason to believe that the cash flow is going to stop, then the loan may be in trouble.
Well, I understand, but what really determines whether a loan can be paid back?
Obviously, the cash flow.
Thank you. And I have just one last question, and that is for the entire panel. Do we have a revenue problem in this country, or do we have a spending problem?
I've said over and over again, spending.
Thank you.
spending.
Entitlements.
No, that's a good point.
I plead ignorance. I'm not the economist on this panel.
Thank you. I yield back.
Thank you. Mr.